Global trading for the Wednesday session was a game of two halves. The Asia-Pacific region reacted very negatively to the developments in the Middle East, and in particular, the threats to the global energy complex from a blockade of the Straits of Hormuz. And that had implications across the board for Asia-Pacific investors. And the fears that rising energy costs would fuel already higher inflation really weighed on markets in this region. The Hang Seng down 2%, the Australian 200 index down a very similar amount. At one stage, the Korean index, the Kospi, was down 12% in trading yesterday. Very negative reaction, real concern, particularly as Korea depends very much on Middle East oil for its energy. However, sentiment swung in overnight trade again. In Europe, we saw markets gain a footing. The UK FTSE was up by about 0.8%. The DAX rose by more than 1%. And that positivity continued into US trading. Now, there were wobbles at the open of the US, and all of the major indices moved into negative territory, but they soon threw that off. And there are a couple of reasons for that. While we did get a minor read on employment, the key data last night was the ISM. Now, these PMI style indices indicate the level of economic activity in the US. And the big surprise was the services PMI was very strong, coming in the high 50s, indicating real expansion in the US services economy. And of course, with services about 2/3 of the US economy, it had very real implications for the economic outlook. And that big surprise on the health of the US economy fed directly into trading. Amazon up 4%, Intel up 5.8%, AppLovin up 10% in overnight trading. So we saw a real strength coming back into the US market, although at much higher volatilities than we would consider normal. Not everyone was a winner last night. Paladin was down 7.6%. And it largely had to do with developments in the oil market. Now, the oil market didn't fall, it just didn't keep going higher. And with a number of analysts calling for oil to hit $100 a barrel, it's stalling at $75 or almost $76, had implications for the broader market. And that might be one of the keys to the short-term direction for the market, the price of oil, which of course you can monitor on the Moomoo platform. Another indication we haven't received a complete all clear at this stage is the VIX index in the US. The fear and greed index fell, indicating increasing confidence, but it only fell to just over 21%. And that's still above the line in the sand at 20% that generally marks the difference between fear and greed. In other words, although things improved and sentiment improved last night, fear remains elevated. It was interesting to note yesterday during our time zone, the Dubai market reopened for the first time since the escalation of hostilities in Iran, and it fell 4.7%. So very clear that people on the ground in the region still very concerned about the outlook. Now, the Australian share market fell very hard yesterday, despite some fairly good news. The Australian GDP coming in at an annual rate of 2.6% is one of the best readings we've seen on the annual GDP growth rate for some time. So a real positive. Unfortunately, a lot of economists have already pronounced that they believe that's as good as it gets for Australia for the next 12 months at least. And we're likely to see a decline in that annual growth rate in GDP. So despite the good data, it didn't have much impact on the market because of the perception that this was a peak for GDP growth in Australia. So in this highly volatile situation, where are investors getting their leads? Well, one way is via the crypto markets. And even people who've never traded a cryptocurrency in their lives are watching Bitcoin very closely, because as in parallel with this big move up, particularly in tech stocks and high growth stocks, Bitcoin rallied hard up to 73,000 US dollars from below 68,000. So that big move upward in Bitcoin came at the same time as investors were piling back into tech stocks. And that does suggest that there is a link between the cryptocurrency markets and those most glamorous high growth tech stocks. And this makes sense at a sentiment point of view. There's very little causal relationship between those two very different kinds of assets, although there are, of course, high-tech stocks that are involved in crypto land. But overall, there's not a direct causal reaction, but it's very clear that the sentiment in these two markets is closely related. Now, there's a key resistance level for Bitcoin at 74,500. If Bitcoin is able to move up through that level, not only will it look good on the charts for Bitcoin and cryptocurrencies, but it's also a likely indicator of improving sentiment towards tech stocks. So there's a line in the sand for investors. If we see Bitcoin move through that 74,500 US dollar level, it could mean a rally is coming in the NASDAQ. One to watch. The parallel on the downside now is 64,000. And while Bitcoin can move very sharply even during a single trading session, it's a little bit away from that at the moment. It does suggest that at least sentiment will remain neutral while Bitcoin remains above 64,000 US. So when we see volatility in Bitcoin, it's generally a sign we're going to see a volatility in the NASDAQ. It's a good indicator of risk appetite. Some analysts are arguing that the conflagration in Iran will see Fed ease policy. The growth numbers we saw yesterday and the inflation rates we're aware of in the US does militate against that, but it's not impossible. And it's interesting to note that the ETF, perhaps best known for its exposure to Bitcoin, the IBIT ETF, was up 7% in overnight trading. And despite outflows on Monday, it has had one of its biggest weeks of inflows into crypto ETFs. So very clear, there's a lot of resurgent interest in cryptocurrencies at the moment. And we're seeing that in the performance of stocks like Coinbase. And top of our watch list today is the Coinbase as it moved up 14.6% in overnight trading. So that combination of a return of positive sentiment to cryptocurrencies and a return of positive sentiment to tech stocks coincided in Coinbase to lift it and make it the second biggest gainer in the S&P 500 last night. Now, there was some news. The CEO met up with the US president, and after that meeting, the US president told banks to make crypto deals. And while there were no specifics around it, that was one of the reasons we saw such a turnaround in sentiment. The president was referring to the Clarity Act, which speaks to stable coins rather than the broad cryptocurrency movement. But nonetheless, Bitcoin makes about 1.2 billion a quarter in revenue out of its stable coin business. So a very positive development for Coinbase. Next on our watch list is Broadcom. It reported this morning after the US closed. And although wobbling initially in response to its result, it has now moved substantially higher, up more than 3% in after US market trading. Now, the first quarter result beat. The revenue was up 29%. But most importantly, the guidance for the second quarter was even stronger, with the company pointing to a revenue range of 20 to 22 billion, of which artificial intelligence semiconductors will make up about half. And this might be the big news out of the Broadcom result. Broadcom CEO saying that they're delivering on their investment on AI already. And of course, if they're able to deliver, others might be able to too. Broadcom also announced a $10 billion buyback, not exactly hugely significant in the context of a market cap of 1.5 trillion, but nonetheless a positive. Plenty of analysts in the Moomoo community have a strong buy on Broadcom, with targets that are up 40% plus from current levels. Broadcom currently trading just above the $300 mark. A lot of those targets are around the $450. JP Morgan this morning, after this result, has come up and revised its target upward for Broadcom to $475 a share. Last on our watch list today is locally listed Silex. Silex is an interesting beast. It's using lasers to enrich uranium, an important part of the process, whether uranium is being used for electricity or energy or for weapons. The enrichment process is a key impediment, and Silex, although it's currently researching and losing funds, burning cash as it were, was hit very hard yesterday when sentiment around energy soured. Now, the whole uranium group listed on the ASX was down around 6.8%, but Silex fell 10%. And it does show the leverage to sentiment in that uranium subsector is a key to performance. Now, there's also extraordinary volatility in these uranium stocks, and there has been for more than 6 months now. So these stocks and this subsector is not for those with low risk appetites. These stocks are winging around. But nonetheless, last week, Silex told the market that over the first half, it had reduced its losses to $42.4 million, down from the previous half. A number of analysts are pointing to expectations the share price could double from current levels back above the all-time highs. Some analysts putting a strong buy on Silex with a price target of $11.60.